Good afternoon, everybody. Thank you for joining the webinar this afternoon on Section 179D and the IRS audit guidelines around Section 179D, tax deduction. I want to, number one, let's make sure everybody can hear me and I'm coming through clearly. If you could just pop it in the chat, let me know if you're coming through and you guys are hearing me well. All right, seems like you guys can hear me, so I appreciate that. Thank you. So a little bit about today. Today's a AIA continuing education approved webinar. I appreciate everybody joining. Today's an advanced topic. So I've done some of these other webinars in the past. Many of you guys have already been on those webinars where we kind of explain the 179D and the 45L and some of the energy tax incentives that are available out there to the architecture, engineering industries, to private building owners, etc. Today we're going to dig a little bit deeper. So we're gonna get into the audits, what we've seen as far as what the IRS is looking at from an audit point of view. We're going to review a couple documents and discuss some case law that we've had recently regarding 179D. So today is a little bit of an advanced topic. If you're not familiar with 179D and the intricacies of 179D, what 179D is all about, it might be a bit high level. So I do want to kind of provide that warning out there at the beginning. You know, I'm assuming that the folks on this webinar have some basic understanding, basic experience around Section 179D, what it is, what it's about, and how they can potentially benefit. Feel free to ask questions if you have questions throughout the presentation. As far as housekeeping for AIA purposes and continuing ed documentation, if you're on this webinar, my information will be at the end, and you're looking to receive credit, continuing education credit from the American Institute of Architects, just shoot me your AIA number at the end of the meeting, and I'll make sure it gets published on there, and I'll send you a couple quick questions. Make sure you guys were paying attention to the presentation so we can verify your attendance, and we'll go from there. So again, thanks for being on. Tell you a little bit about myself. My name's David Diaz. I'm the managing partner here at Walker Reed Strategies, and a little bit about Walker Reed, so you guys get some background if you've never heard of us or you're not familiar with Walker Reed. We're a specialty energy tax incentive provider that specializes specifically in Section 179D and the 45L tax credit. So that's our main focus. Our main that's what we do. Eat, breathe, sleep, day in, day out. So we're extremely highly specialized in that subject area. I've had tons of experience with the 179D, the designer side of the 179D, the applicability of the 179D for the designers of energy efficient commercial building properties, and have also participated in a handful of IRS audits. So we're pretty familiar and pretty versed with the what it takes to successfully get through one of these audits, what some of the pitfalls could be when you're going through an audit, or even on the front end, what things can we avoid to make sure that you're in proper compliance, and if you do get selected for an audit, that you can come out of it successful, meeting all the requirements, with it being hopefully as minimal of a headache to you and your business operations as possible. So anytime anybody has to go through an IRS audit, even the simplest ones can be a disruption to your overall operation and your team's overall business purpose. So our goal here is to try to avoid that and catch a lot of that up front, and hopefully, be able to qualify the right type of opportunities and right type of incentives for you as we move forward on some of these opportunities. So I'm going to be presenting, and I left a lot of this general information in here. This is the basics of 179D. For, in case you want to have it as a reference point, I'll be sending these slides and some of the accompanying presentation documents that I'll be doing at the end of the presentation. I'll send it to everybody. But this just gives you an idea of what 179D and what 45L is. I'm not going to go over it in detail. Big picture, it's an incentive that can be allocated to designers of energy efficient commercial buildings. Private building owners can take it. There's kind of two time periods in which this incentive has a major change or difference. And one of them is being 2022 and prior. Anything in 2022 and prior pretty much falls under this slide, where it has we call it the Pre-Inflation Reduction Act rules and applicability. So that's Pre-Inflation Reduction Act. There's some big changes that happened going into 2023. We're still waiting on Treasury guidance for a lot of those changes and a lot of the finalizations of them. But big picture, this slide kind of represents some of those changes and the opportunities we were seeing with Section 179D being increased from $1.88, where it's previously been in 2022 and prior, to going up to $5 a square foot in 2023 and after. There's some requirements that are necessary for that, but I'll let you guys peruse through this if you just want to have it as a refresher when I send the slide. I'm going to jump into a little bit of the meat and potatoes. I mean, I got this webinar geared up for 90 minutes. My goal is to kind of get through this a little bit quicker than that, but I just wanted to have enough time because it's a robust topic, the topic of IRS audits, and there's a lot of experience, and I'm sure there'll be tons of questions that'll come up. So I just wanted to make sure we had sufficient time to go over and cover everything in detail. So, and as I mentioned, as I go through the presentation, if you have a question, something comes up, feel free to pop it in the chat. I actually prefer and enjoy that, so I can answer some of that live, and sometimes it's what everybody's thinking. If you have some questions, feel free to pop them in. So one of the main reasons that this is a topic that's important and a topic that is relevant is because even as part of the Inflation Reduction Act, the IRS the federal government pumped a ton of money into the IRS, and a lot of that money is going to go to to increase the number of auditors and increase the number of compliance officers that they have out there looking at opportunities, looking at projects that could potentially not meet the requirements, or they can find some low-hanging fruit where they could essentially be able to go and disallow tax incentives, right? Their goal is to go find where the law is being misinterpreted or misapplied, and go and essentially not take advantage of that, but go and capture that revenue that the government's missing out on because tax law is being misused or abused potentially, sometimes not even intentionally, but just misunderstood from the interpretation. So when it comes to 179D, there's really two sides of the coin when it comes to the applicability of 179D. There's what's called the private sector side. It's a fixed asset based transaction on that side. It's basically taking a asset where you have a new building or major improvements that were done to an existing commercial building, and you are reclassifying because you meet certain energy requirements. You have the opportunity to reclassify and bring from a 39-year asset or a 27.5-year asset, if we're looking at residential apartments, into year one in the form of accelerated depreciation. So it's a one-time deduction that you get to accelerate the depreciation on, and you take a 39-year asset, and depending on what level of 179D you qualify at, you have the opportunity to take, let's say it's a $200,000 179D deduction. You can reduce your 39-year basis by that $200,000, and you take a year one accelerated depreciation in the amount of $200,000 to offset. So I'll represent that. It's been our experience at Walker Reed over the hundreds of millions of square feet and billions of dollars in deductions that we've certified. The audit activity in that area tends to be pretty low, to the point where if audits are occurring, we're not even finding out about them. They're happening. Clients getting audited. They're literally turning in our certification, and that's resolving the issue, and they're never hearing of it. And maybe the audits are coming up as a ancillary result of an audit for a different reason, and they're just verifying that proper compliance was being had as far as what the requirements are to take a 179D, but they're not really being contested. The IRS is not requesting documentation, not doing IDRs, information document request. They're not really digging deeper in that area. And honestly, it's my experience that it's pretty clean, right? You built the building, as long as you're meeting the requirements, you're using an independent third party. Again, that's Walker Reed's role. We're that independent third party. You're using an independent third party to certify that the building's meeting those requirements. It's not really an area that the IRS sees as an opportunity, where they're not really seeing a ton of abuse, right? It's a pretty clean transaction. And the rules and the laws around the use and function of it, whether you agree with them or don't agree with them or like them or not, they're pretty clear. There's not a ton of discrepancies or a ton of gray that folks can get creative with and try to abuse when we look at it from an IRS perspective. So it doesn't tend to be a highly contested area. Now, on the flip side of that, the other opportunity and why it's relevant, and it's part of this AIA series to the architects and the engineer. On the flip side of that, there's the opportunity with the 179D to have designers of government-owned buildings, and that has changed as of Inflation Reduction Act, and I'll get into that as well. But speaking retroactively and speaking in the past, 2022 and before, you've had the ability for government-owned buildings to allocate these deductions to the primary designers responsible for the design of the energy efficient commercial building property that's being installed. So a little bit on the definition side, when I say energy efficient commercial building property, it's a tax term. I'm speaking from a point of view of the actual tax code definition of the energy components that are applicable for Section 179D. And those are real property components consisting of like lighting, HVAC, building envelope, hot water systems. And they can both be either new construction or they can be in the form of a retrofit or a renovation. So it really applies on both ends when I speak of energy efficient commercial building property. And again, it's property. It's not property like you would think of it as a piece of real estate or just one building, right? It could be the real property. Property could be in its tax form, any of the components within the said building that we're certifying. So just a little bit of background there. So there has been the opportunity in 2022 and prior and continuing on for those government-owned buildings to allocate the deduction that's available into the deduction that's available to the designers of the energy efficient commercial building property. They can allocate those incentives, and that is an area that we've seen quite a bit of activity around audits with Section 179D. And I'll get into why. Before I jump into that, I got a couple questions. I want to answer them because they're relevant. One question is, does nonprofit organizations Can they take 179D? And the answer to that is starting in 2023, after the Inflation Reduction Act changes, nonprofits can now also allocate the deduction. So I had mentioned there was the 22 tax year that and before that was just government owned. Starting in 2023, you got all the government owned, and pretty much any any tax exempt organization can also allocate the deduction to the designer. So great question, thank you. Other question was around water consumption improvements. No, when I speak about hot water, I'm speaking about the energy used to heat up the water. Not water consumption itself is not a area that's available for 179D deductions. So thanks for that question. So jumping back on the audit reasoning. So what we've found and what we've noticed is, I believe it was 2016, the IRS Large Business and International Unit added Section 179D to their watch list of areas that essentially have a high abuse or high risk of being overstated and taken advantage of from a 179D perspective, from a energy tax incentive perspective. So essentially you had folks erroneously claiming deductions that should not have been taking these deductions. And one of the main reasons for that is there's some flexibility or some gray area around the definition of the designer and who is a designer and who should be being allocated this tax deduction as a designer. So there's a couple different things that happened along with being added to that watch list. The IRS issued a memorandum that essentially laid out scenarios. I believe there's 8 scenarios in that said memorandum. They kind of walked you through the thought process and the Treasury's mindset as to who is a designer, what qualifies them as a designer, and why. So the definition of a designer for purpose of 179D is a person who is primarily responsible for the design of the energy efficient commercial building property. A designer can be a architect, engineer, contractor, energy consultant, or consultant, I believe is the term. And I mean, I'm going off the cuff there. It may be a little bit different, but in general, it states what a designer is. It states that they must be primarily responsible. Additionally, it goes into speaking on the fact that they cannot merely just install the property that's the energy efficient commercial building property. They have to design it. They cannot just be merely installers of said property. And what you started happening was, you get the creative minds and the business development folks of the world and some aggressive bad actors in our industry who essentially took that definition of a designer and they ran with it. And they said, oh, look, it says architect, engineer, contractor, consultant. And they pretty much went and marketed this incentive to all of those parties, above, right? They went to hit every contractor, whether they were mechanical or electrical, whether they were involved in design or not. They went to all the engineers, structural engineers who had no bearing on the energy efficiency of the buildings were being, approached and pitched that they could qualify for these incentives on their government-owned projects. So they started, it's kind of the mindset of you let creative salespeople loose a little bit. You don't give them a leash or proper guidance or proper training, and people get creative and they're trying to make money, and they start widening that net of who's available and who's an opportunity when it comes to 179D. And what ended up happening was the IRS must have started running into to audits for contractors, for example, general contractors that had no design responsibility, yet were claiming Section 179D because they were able to go to these government building owners, request an allocation letter. Government building owners in many of these cases had no idea what the allocation letter was, or why it was being allocated, or they were, being sold a bag of goods of what they were signing over. They were having these deductions signed over to them, and with very little to no oversight. And then these buildings were being certified. The buildings were very likely energy efficient and met the requirements from an engineering perspective and an energy analysis perspective. But what was happening is now you had buildings being certified and being allocated to parties that realistically had no involvement in the design criteria or the design of those buildings. So, as the way IRS kind of does this is they put out guidance. They don't really know what's going to happen. Then you get private industry takes it, runs with it, and starts, selling these incentives, and then they start seeing where the compliance issues lie. So what was happening is essentially there was a large number of these deductions being taken, well, to parties who realistically don't meet the intent of the IRS when it comes, or of the law when it came to who should have been being allocated these incentives. So somewhere in the process of that, this incentive now lands on the IRS's large business and international, watch list of tax incentives that could potentially be low-hanging fruit from an audit perspective. And so to just clarify a little bit, and I'll get into who should actually be claiming these deductions. So, and it's an important fact, and it's an important part of this, realistically, you want to have some sort of contractual responsibility, or you should have created the technical design yourself for these energy efficient commercial building properties. So, an architect many times is a pretty clean one from the point of view that the architect is usually contractually primarily responsible for the design of the buildings that are being built or remodeled. So, the architect is usually the prime. They're at the kind of the head of the design team for the most part, and that's not always the case, and I understand that. But in a large percentage of the scenarios, the architect's kind of the head person. The engineers are working under that architect. From either, in many cases, a subcontractor capacity. The MEP, mechanical, electrical designers are working under that subcontracted capacity. Structural engineers are also working under said capacities, and everybody's kind of working as part of that design team with the architect kind of leading the path forward. And I realize that there's hundreds of different, maybe not hundreds, but tens of different, contract methodologies that could be gone to in scenarios, but that's a pretty typical one that we see. So you'll have the situation where an architect is a very clean, primarily contractually responsible, has the prime contract relationship with the government building owner, and may be allocated this deduction at the discretion of the government agency. That's a pretty clean one. So, you're an architect for the most part, you should be in a pretty good position to be taking these deductions. Engineers as well is also a pretty good spot. But, again, unless you have the primary contractual role, you do need to be the ones creating those technical specifications and documents, right? So, mechanical and electrical engineers, just because of the nature of 1790, it's heavily focused on the mechanical components and the electrical components. That's a pretty clean one. If you created MEP documents, whether you did just the mechanical or just the electrical, those are pretty clean parties to who should be taking the design, who could be claiming an allocation letter for as a designer. So the structural engineers, that gets trickier. In most cases, it's my experience that structural engineers do not get involved in the design components as it relates to the energy efficient building systems of the building, right? And there could be an argument made for that, well, you know, the structural engineers designed the shell of the building, and therefore they are in theory designing the building envelope, and the building envelope is in theory one of the components that is called out within section 179D. Where that could be kind of true, it's also a stretch, right? We've seen audits around this topic, not necessarily our clients. I've actually been called in to consult other clients who've been put in a bad spot and ran into an audit and didn't know what to do. But for the most part, when I have these conversations with these structural engineers, and just my experience, I mean, I used to be a general contractor, ran design build projects. I'm very familiar with this world, specifically when it comes to structural engineers. You know, the structural engineer is not providing any sort of real input into the design features when it comes to the energy efficiency of the building. I mean, there could be a scenario where they are, and if they are, and then in that case could be involved with the design and could very well have participated in the design of the energy efficient commercial building property. But for the most part, structural engineers are looking at loads from a structural perspective. You know, they're worried about the building falling down. They're worried about the roof withstanding. They're worrying about the load of you know, how many humans and dead loads and live loads of the building and the structure and integrity of the building itself. They're usually not involved in specifying insulation, R values, you know, U values, SHGC values of the windows, etc. You know, they're not involved in that side of it. Now, again, they could be, and they may have the skill set to, and if they did, that's a different conversation. But in its typical form, where you have a structural engineer and in their typical capacity, it's not really a normal activity that they're involved in. So, so when we talk about engineers, mechanical, electrical, it's fairly clean as long as they're creating the technical specifications or have primary contractual relationship. Structural engineers, I got into it pretty deep. Usually it's not going to be the case that they're eligible to qualify. Now, we look at contractors, right? So within the definition of who a designer can be, you have the word contractors. And yes, a contractor may be a designer, right? They can absolutely, there's very popular now. You know, it's been for the last 20 years or so, design build contractors, and that contract methodology and system that they go to market is a very attractive contracting methodology today. So if you were a general contractor and you're part, you know, you are the prime part of the design build and you're doing design build contracting, you are very much part of that design team. You're contractually responsible for the designers, even though you may not always be creating the technical design documentation yourself. You're still responsible for everybody under you, contractually speaking. You know, the architects, the MEP firms, the structural engineers, everybody under your umbrella is falling as part of that design build contract. So that's a pretty clean contract methodology, right? There could also be design build contractors within the specific trades, where you look at mechanical design build or electrical design build, who had direct design build responsibilities and contracts for those corresponding branches that very much affect the energy efficiency of the building. Same thing with like controls contractors. There's another one that goes to bat very typically in a design build capacity. They usually do all the technical design and engineering of the control systems that control the HVAC and control the lighting systems. So they could also participate as a designer. And the last one that I like to get into that's pretty clean as well are the energy service companies, ESCOs or performance contracting entities and companies. They're very traditionally in a good position to take 179D, being that they are usually have design capabilities in-house. They have the design team in place to take advantage to design all these energy efficiencies, and their overall purpose a lot of times around these contracting vehicles and the way they're going to market is literally to save energy. You know, the way they do business is by creating energy savings. So the definition of 1790 and the purpose of 1790 is extremely aligned with energy service companies, ESCOs, lighting contractors who are doing ESCO-ish work, doing the retrofit capabilities, and they're doing design work as far as specifying which lighting systems to change in and out and whatnot. So this is these are pretty clean from that point of view as to who can take the deduction and what their roles are. So now I'm gonna jump in. Actually, hold on, I have a question. That's actually a great question. Thank you, Frank. So a question is, could an architectural firm take 50% of the deduction and the MEP firm take another 50% of deduction, or is it all or nothing from a single firm side? And the answer to that is yes. A 179D may be allocated at the discretion of the government building owner amongst multiple designers when it comes to section 1790. So you can actually do 50% to an architecture firm and then 50% to the MEP, or 50% to the architect and 25% to the mechanical firm and 25% to the electrical design firm. I've seen one allocation that had seven or eight parties that were all part of the design team being allocated, you know, portions, 10% and 12% and 7% and 25% and whatnot. It was split up into a bunch of different parties. As long as everybody agrees and the government agency is willing to make that allocation, they may allocate it out and parse it out into corresponding percentages as everybody agrees. So thank you very much for that question. That was a very good question. So I'm going to jump in and I'm going to open up and I'm going to go through, this is basically the IRS's, call it checklist for the, what they look at when they're auditing. And this is part of like a training manual that was issued by the Large Business and International Process Unit. So this is, and I'll share this with everybody as well, so you have it. I mean, it's available on the internet, but this was put out in, you know, it was revised more recently in May of 26, 22, but I believe it was like a 2017 or 2017, 2018 document that was put out. And I'm going to go through some of the steps and kind of give you guys an idea of what's being looked at when it comes to the 179D and some of these areas that I've gotten into a little deeper, and some of the intricacies and what's required. So step one, I mean, the auditors, first thing they're looking for, they want to see if the 179D was claimed on the return. That's a pretty simple one. You know, it's a very tax basic transaction. Step two, they want to obtain the 179D study. So when we get into the 179D study, that's really the role that our firm plays, right? We're the ones who provide your companies, you know, whether you be the taxpayer or your CPA, and we're providing it for one of your clients. We're providing that study that contains all of the IRS guidance requirements to comply with section 1790. So when you get a study from Walker Reed, it's going to meet all of these requirements of section 2 of this checklist that the IRS is kind of checking out. It's gonna, you know, it references notice 2006-52, 2008-40, 2012-26. Probably when they update this, and may have some more recent versions. But our certification already takes all that into account. It looks at we've created our templates and our systems to meet all of those requirements, and make sure that we are in absolute compliance with section 1790 and the applicable guidelines. So you're covered there from using Walker Reed perspective. You're going to have what you need. You know, I've seen some pretty crappy certifications out there, folks who just really don't understand the tax side of this. You know, they get that you have to do an energy model, they get some of the requirements, and they get bits and pieces of it. and then they try to kind of slap together their own certification. You know, that information's out there. The certification, it's all black and white within the IRS guidance, how to put a certification together. I mean, we're not reinventing the wheel. We are just making sure we comply with it and making sure we meet all of those requirements, that's what's really important. So, you know, if we make sure we meet all of the requirements within the notices, the treasury guidance, the tax law, you're going to be covered, right? And from that point of view. So that's the next step they're looking at. And again, once you get one of our certifications, we're hitting all of those points that the IRS auditor is looking for. In this case, it's determining if the taxpayer, the IRS is looking to determine if the taxpayer is the building owner or a designer of energy efficient commercial building property. And then states on here, if you are the designer, to jump to step 10. So I'll get to step 4. And I'm going to focus heavier on the designer's part of it because it's more of the area of inquiry around 179D and the audit. So the next step is to determine if the deduction was claimed in the year in which the energy efficient building property was placed into service. So that's a very important piece to this. So the way the 179D works is you're taking the deduction in the year in which the building is placed in service. And what that means is if you have a building and it got placed in service from a tax perspective, and beneficial use has been made and depreciation is being claimed on that building, you are the year in which those assets have been placed into service and that building was either constructed. I got a question about retrofits or retrofitted. So it's the same scenario. It's when was these retrofit property placed into service? So the year in which the retrofit property was placed into service or the building was fully constructed with all the components that make up the energy efficient commercial building property. And that's referenced in here as EECBP. So I make a reference to it, I call it out, but so the year in which that was placed in service is the year in which you have to take the deduction. So for example, if you had a 2020 building that was, constructed, placed in service, depreciation started on it in 2020, and you're on this call today and you just found out about 179D and you're excited to go take the deduction on that building, you can, but you're going to have to go back and amend your 2020 tax return, and the deduction has to be taken on the 2020 tax year. You can't take it in the current year. Now, there's some adjustments there in the private sector. You can do a 3115, do a change of accounting method. It would still be a 2020 adjustment to your depreciation schedule. But then you would have to, it would still be based off of that 2020 tax year being placed in service. If you're on the government side, you can't do a 3115, you can't do a catch up in depreciation. So you would have to actually go back and amend that tax return. So you have the ability to take it, but only to the matter in which you have open amendable tax years to do so in the case of government owned building. So got a good question here. It says, how can someone take a 179 deduction? How often, I'm sorry, can someone take a 179D deduction on their property? So starting in 2022, that's a great question. Thank you. Starting in 2022 and before, historically, you could only take the max $1.80 a square foot or $1.88 with some inflation kickers, whatever that there's like an inflation adjustment of like 8 cents. That's give or take. But once you took the $1.80 a square foot or the entire deduction amount that was available, you were capped out on that building. It was a one-time deduction. You can never take the deduction on there again. Starting in 2023, they with the Inflation Reduction Act, they made some adjustments to the 179D, where if you come back and you make additional energy efficient commercial building property improvements. So let's say you built a brand new building and you built it in 2021, and I don't know, in 2025, new technology comes out the newest and greatest HVAC technology comes out, it's 70% more efficient than anything on the market, and you make a decision to change out your HVAC units and retrofit them. It's a major project. You making it, you change them out and you replace them. Well, now if you incur new capital and you make a new capital expenditure, you have the ability to go and reclaim Section 179D on that building. And you can do so once every 3 years for the private sector buildings, and once every 4 years for nonprofits and government-owned buildings. So that's a new rule change that came up as part of the Inflation Reduction Act, and it gives you the ability to recertify. And it's where it's going to really, I mean, it'll apply in the private sector, but where it's going to kind of apply a lot, and I already see the applicability coming, is with the energy efficient ESCOs and performance contracting, where a lot of times they do phased out work. So they'll come in, phase out one of the ECMs, energy conservation measures, and they may do, lighting and controls this year. And then in 3 or 4 years, they may come back to the same project and contract to do, rooftop unit replacements, and change out some VFDs, some work on some of the pumps and systems, on some of the other areas that are being fed by like a chiller or cooling project. They may go in and do new improvements, right? So now these phased out projects, new capital is being spent, energy is being saved on these buildings. We have the ability, as long as it's 4 years after the previous project, to go in and recertify that it's meeting the requirements and energy is being saved, and you're achieving that new energy efficiency target. So it's gonna create some great opportunity there. All right, so back to the audit side and kind of what. So this step 4 was, let's determine what year it was placed in service and make sure that the deduction was taken within the year in which the building was placed in service. And this gets screwed up a lot. A lot of folks, we ask this on the front end of the deductions, and we our clients inadvertently give us the wrong date, and we rely upon that information to create the certifications. Then they get audited and have had to make adjustments, have had to actually go amend other returns, move the deduction over into a previous year because it was actually placed in service in the wrong year. We try to catch that. It gets put on the allocation letter, it gets put on and it gets provided to us on that end. But if for some reason it was just wrong, the date was wrong to begin with, or the year in which it was placed in service was wrong from the beginning, and you get into an IRS audit, it comes out, whether it be through payment records or through contracts or final closeout documents, that the actually year it was placed in service was on a different time frame, you will now have to make that adjustment. They're going to ask you to go re-get the certification recertified. I'm sorry, the allocation recertified, re-signed with the correct date on it, or amended. They're going to ask us to amend the certifications in order for you to, or they're going to disallow your deduction for having it in the wrong year. So you can go through the hoopla of getting it done right. So it's an important question. I get some clients that hey, we're all busy. You guys are busy. It's why you're on this call. It's why you're trying to save taxes. Your clients are extremely busy. But when we ask this information, it's important information. We need it. We have to rely upon that information to give you a valid certification. And if we don't have the correct information out the gate, now we're struggling to provide you, we're trying to avoid having to fix it and get it corrected on the back end and having you potentially lose out on a deduction. Let's say it was an open amendable, situation where, let's say 2019 is open for amendment, but it's going to get closed out. So we do it. And then we find out that was actually placed in service in 2018 and not 2019. Well, if you went into an audit, now you can't go back and amend that 18 return. You lose out on that. You paid us to do all this work and you gave us the wrong information. Now you lost out on this incentive and you lost out on the deduction. You have to pay the tax. So it's important that we get that information right on the front end. Got another question. It says for an ESCO, I assume this is all around the ESCO's fiscal year or tax year. It has nothing to do with the school district's fiscal year or tax year. Yes, that's a very good question. For an ESCO, for an architect or an engineer, for anybody really, this is based around your fiscal year and not the school district's fiscal year or the government agency's fiscal year that you're dealing with. So great question. Thank you. All right, let's jump into to the next subject. So step 5, they want to make sure they obtain the relevant Internal Revenue 179D deduction information for each building. So this is an important area that a lot of times if you're doing a portfolio project, you're getting maybe your contracts lumped together. It happens a lot in the ESCO world where it's like, hey, we're doing a $15 million project. Within that $15 million project, it consists of these 15 school districts or 10 school districts or whatever it is. We will ask you to give us a breakdown of that cost per each building. It's important because we're going to break down those deductions per building within our certification. It's required that we do so. The square footage is broken down per building, the deductions, year placed in service, all of our energy modeling, everything is broken out from our point of view on a per building basis. Your cost also that you provide us has to be broken out per building. So we want to make sure the IRS and both of us, we're trying to make sure that in no scenario are you claiming a larger deduction on a building, on a per building basis than you would have allocated to you from the 179D perspective. So if that $10 million, if it's broken out, $1 million per building, except for one building that you did a very small scope at, and that scope was, $150,000, but it was on a huge high school for say, maybe the deduction on that $150,000 project, when we go and we certify it, we field gather all the information, we do our sampling and our modeling and everything on that building itself. And maybe the scope of what you did was kind of small, but there's still energy efficient components within that building. We go and we review it and we get a $600,000 deduction. Well, if we don't know that it should have been capped at that $150,000 capital spend that occurred on that building, we're not going to be able to lay that out. And once it comes out in audit, it's going to be disallowed or it's going to be reduced. Not so much disallowed, it's going to be reduced. It'll be reduced down to that $150,000 number because you cannot exceed the amount of the deduction that you cannot exceed the amount of the energy efficient commercial building property cost with the amount of deduction of 179D that you're taking. And this is a really important area moving forward. Historically, like parking garages, some lighting retrofit projects, maybe some control projects, this was an issue on, but it was a minority of the situation because we're looking at smaller dollars, right? $1.80 a square foot. Yeah, most projects, it depends what you're doing. You're going to go hit those targets. It's not going to be an issue. But as we start looking at some of these new dollar amounts, with 179D being expanded, looking at $5 a square foot, looking at some pretty large numbers, you're going to find that some of these projects, specifically when we look at retrofits, you're not going to have spent $5 a foot on that building, and you're going to get capped. So especially in the lighting retrofit space, it's a lot of that ESCO space. A lot of those projects you're going to be capped on the cost. So it's just an important thing to keep in mind as we move forward here. All right, so let's look at back at some of the considerations that are important for claiming 179D. So yeah, for taxpayers claiming the deduction as a designer, there's a couple areas that are important here that I highlighted, and I've kind of talked about this, but I'm going to emphasize them again. The IRS is looking at this, and they're looking at 3 important items that they want to make sure that qualify you as a designer. One, they want to verify. So here it says here that the contracts for the design for the work performed on the energy efficient commercial building property, that they should describe that the taxpayer's responsibility of the scope of work on any project and any design responsibility. So they're literally looking at your contracts, and they want to make sure there's language in there that gives you contractual responsibility. So as an architect, as an engineer, sometimes the language within, I mean, it's in there, right? But sometimes the language is very legal, and it maybe avoids some of that scope information, or it's kind of limited. You may want to look at that and make sure it's clear that that you are the designer and that you're taking responsibility for the design. So it's only going to make it cleaner. If you get an audit, you're taking 179D. It's part of your business strategy. If you can have these things be clear on the front end, where we can hand them a contract and point to section 2 of your contract and very easily say, it says very clearly right here that we're the designer. Contractually, we have that obligation and responsibility. Boom. That's a check mark. You got to figure the IRS auditor is going through a checklist. This is literally their checklist. They gave it to us. So if we can check off every one of these marks, it's going to be clean on the back end. It's not going to be disruptive to your business practice. You're not going to spend, 6 months or a year. We've been some of these, I think, close to 2 years. Not necessarily fighting it, but had to take one to appeal. And it's essentially because the background information to substantiate the role is messy. So now the burden of proof starts to come out, where they want us to prove that there was design. Well, show me if you can't, if your contract doesn't say that you have design work, show me your technical specifications that you produced, which is step 2 of this. Are you the architect or engineer of record? Where does it say that? Show me that you have engineers working for you. I mean, I've seen that as an IDR request. It's not a requirement that you have an engineer working for you. It's not a requirement. You can be a contractor and not have engineers and still do design work, but they'll start digging if it's not on there contractually, right? They will start asking these other questions, and now you have the burden of proof of having to go and prove to them that you were involved in the design. There's emails that talk about design. There's now this whole document request where we're going through an entire process of trying to clarify your design responsibility and prove to this auditor, whether it be an initial audit or an appeals, prove to them that this should not be disallowed because you're not a designer. So, and that's what they're going for, right? That's they're going to low blow and try to go after that topic because they know that it's the area that gets abused. So that's kind of step number 2, is the technical specification and sealed drawings produced by the taxpayer. And these documents should show the architect or engineer of record for the project. They want to see a title block. The sealed drawings typically show the designer. And this is more like advice to their auditor. Hey, look for the title block. It usually says who the designer of record is. It also says, while the designer of record. So this is the part where I kind of mentioned that, it's just because it isn't signed and sealed doesn't necessarily mean you weren't involved in the design. They're telling their auditor that while the designer of record is not the same as the designer for purposes of 179D, if the taxpayer is a designer of record, it's useful fact in determining that the taxpayer is a designer for 179D purposes. So again, if you are an engineering firm and you sign and seal these documents, sometimes even if it's not required. And I know there may be some liability responsibility there as well from your end and other reasons you may not. But if you're creating documents and you have the ability to sign and seal them and you are the engineer, why not provide that information? Why not have these documents that have that information, have your title block, have all your licensing information, because it's going to check off the box and move on to the next subject. Another question, it says, and it says caution here, right? So it's alerting the auditor saying, hey, many trade subcontractors, and this is where they found the low hanging fruit. They're giving their auditor a big red caution sign. Say, hey, many trade subcontractors, HVAC, lighting, interior lighting, windows and doors, produce shop drawings to make materials and make sure these things. these shop drawings are not technical specifications required of the designer to qualify for 179D. So one of the big areas that, some of these kind of scrupulous competitors that were messing around in the 179D space, what they were doing is that they're going out and saying, hey, you know what? You're an HVAC contractor, you're a lighting, you're a window manufacturer, you're definitely involving design, right? You create design documents. And they're like, well, how do we create design? Well, your shop drawings are design documents. And the shop drawings are not design documents. They're not, it's not from the point of view of 179D and what 179D is intended to be. They're not actually design documents. They're documents that are maybe, suitability for construction, but they're not design documents for the purpose of meeting the requirements of section 179D. And that's where people started to get kind of cute and go on and get creative and try to take advantage of some of the gray within the law. And they go, well, and I heard another one I heard a lot was, hey, my provider told me that as long as I was part of design meetings, because when we were on site and we were running the ductwork, we had to reroute the ductwork because there was interference and we had to create some documents, some drawings. And I was part of a design meeting where we, adjusted and made some change orders and work orders to move ductwork around or move the location of an HVAC unit. That's not the intent, right? So the intent isn't that you are a designer, because you had to be a designer, you were forced to get your job done in its normal capacity. That's a normal activity of your job to run into, these scenarios that happen on site. Create maybe some drawings to send to the design team and say, hey, design team, I need to reroute, HVAC unit 10, 7, and 15, and I need to move them here, here, and here because of XYZ reason, and here's an email. That's not designed for the intent, right? So again, with 179D and with any piece of tax legislation, what is the intent? What's the intent of the law? And am I actually meeting the intent of the law? Anytime you kind of start to get creative to go and meet the intent of the law, now you're falling outside of that, and you're putting yourself in an audit risk. Now, if your firm is okay with being risky and not worried about it and would rather go down the riskier path, hey, we're happy to go certify that building and say, hey, the building itself meets the energy criteria, meets the energy requirements. I can't state whether or not ABC contracting was a designer or not, but I can tell you the building meets the requirements. We're happy to help on that end. And if you want to be aggressive, we can help you navigate the paths of what we consider to be aggressive. Where's the gray line? When are you crossing over from black and white? Happy to help go down that path and have you and your team of CPAs and professionals make an educated decision whether or not you feel like you can defend this in an audit if it came up. And I would be happy to provide our opinion, whether we feel that it's defendable in an audit. And then you as the taxpayer can ultimately make the final decision whether or not you're going to take this incentive and go with it. Third step here is they want to make sure that the allocation document for the government building owner should be studied to ensure it contains all the requirements. So that's part of it. That has to happen. Got a quick question, and I'll go over the allocation in step 7. Got a quick question asking me, how do we get continuing education certification? I mentioned that at the beginning, maybe you weren't on, but just send me an email at the end of the presentation, and I will make sure, send me your AIA information. I'll make sure you get your continuing education credits logged into their system, and I'll send out a little questionnaire, make sure you're paying attention. So appreciate it. Thank you. Now let's move on to the next step here. So step 6 is to obtain a copy of the certification, verify that the certification has all the information as required per section 4 of the notice and section 5 of the other notice, and they meet the requirements for the interim rule lighting. Again, if you're using Walker Reed, this is not an area you got to worry about. We're going to make sure that the certification itself is contained within our reports. So you don't have to worry about about it not being inclusive, not meeting all our requirements. That's going to all be in there when we do our certification. So in terms of step 6, sorry, going back. Oh, this is still step 6. They want to make sure that the certification, this goes back to more of the certification topics. And again, we're going to make sure that all these certification components are included within the certification we provide to you, whether it be section 179D, or if you're CPA and we're working with you on 45L, we're going to make sure that all these requirements are going to be met within those certifications we provide, and they're suitable for your use to claim the tax incentive. So step 6, I'll go through that. All right, so to jump into the allocation letter. So step 7 is in order for you to get a 179D tax deduction, the tax deduction needs to be allocated to you by the government building owner. And in order to get it allocated to you, we need to have a allocation letter that includes pretty much these 8 different components. So number 1, it needs to have just its general demographic information: the name, address, telephone number, authorized representative of the government building owner. They have to have name, demographic information of the designer. So it's just your information as the designer receiving that information. The allocation has to have the address of the government owned building on or which the energy efficient commercial building property was installed. So the actual building address and the demographic information of the building that's being certified itself, that's a requirement as well. And the cost of the energy efficient commercial building property, including labor. And they mentioned to their auditor that this does not include the cost of the entire project. So, I get into this a little bit with folks, especially when we're doing retrofit work, right? The cost need to be the costs that are related to the energy efficient commercial building property. So let's say let's go back to the ESCO example or performance contracting example again, or retrofit scenario. You go in and you have 10 energy conservation measures that are being performed on a building. You got lighting, you got HVAC, you got some windows and doors that are being replaced. You have, those are 3. You got solar panels being installed. You have a roof system that's being installed. You have, playground equipment that's being installed, kitchen hood, some refrigeration projects occurring. So let's stop there. That's 8. The point here is the components that are applicable to the section 179D that are relevant in this case are going to be all of the ones that are energy savings and core to the building. So your HVAC, your lighting, the envelope improvements, the roofing project itself actually needs to fall within that requirement because it becomes part of the envelope. All that cost is applicable to your project. What has to be backed out of the cost of the allocation letter for that particular building, you'd be looking at the lighting, the solar, the playground equipment, the kitchen hood project, and the refrigeration equipment for the kitchen as well. So those components, even though the kitchen hood and refrigeration equipment, they consume energy, right? And you may have the option to choose more or less energy efficient components to satisfy that piece of the of the ECM. They are still not part of the technical definition for 179D purposes of what makes up the energy efficient commercial building property, right? So from a tax perspective, there's 1245 property and there's 1250 property. If you're a CPA, you'll understand this pretty clearly, but if you're not, I'll explain it. 1245 property refers to all the things that are more considered fixtures of the building, furniture, fixtures, things that are not core to the building and make the building function and operate as a building, right? For whatever its use is, so the kitchen equipment, the refrigeration equipment, the hood, the playground, all those areas, that's 1245 property. 1245 property gets backed out of the energy analysis for the purposes of section 179D. We're only looking at 1250 property. 1250 property is the real property that makes up the components of this building, and the energy efficient systems that live within that 1250 property building. So it's the core building, right? It's the shell, the slab, the walls, the core lighting for the building that lights up the primary purpose, the main central heating and cooling systems of the building. If you have a shop in the school, any mechanical equipment that's on the shop, that's specific, that's 1245 property, gets backed out. If you have any task lighting for a science class, and you need to look at microscopes or lighting specific over workstations, that gets backed out. That's 1245 property. It's more of the business use of being a school, so it gets backed out and doesn't get analyzed within our calculations. So therefore, equivalently, that cost needs to be backed out and removed from our calculations as well. So it's sometimes it can hurt you, right? Because you did this big project, but now you have to back out these components. And when we're backing out these components, it may reduce the cost. And if you're in a situation where the cost might be capped and having sufficient cost is an important piece of the pie, you're going to be in a good, you're going to be in a position where you need that additional cost, right? Well, you can't use it, unfortunately. On the flip side of this, when we start looking into the future and we start looking at 2023 and beyond, this applicability may help, and it could be a strategy in certain situations, because in the same scenario that I just explained, the components that are part of this energy efficient commercial building property improvement and part of those 179D study, these components now need to meet prevailing wage and apprenticeship requirements for the labor that's being performed on these jobs in order to achieve the higher deduction amounts of $5 a square foot. So, if you've been on my previous presentations, I've gotten into that pretty deeply, where in order to achieve this new Inflation Reduction Act higher amounts, you can still claim a deduction and get a lower amount. But if you want the higher $5 a square foot, and that's what's moving and attractive for you and moving the needle, the energy efficient commercial building property cost and all the work that surrounds that has to meet that prevailing wage and apprenticeship requirement. Well, in certain situations, it's going to be pretty convenient if you can back out the painting and the gardening and certain areas that may or may not meet that prevailing wage and apprenticeship requirement, or you can't meet the requirement as part of those ECMs. You can back that out and only have to make sure that the costs that are associated with the work that's being performed as part of the 179D and as part of the energy efficient commercial building property cost, making sure that that meets the requirements of the prevailing wage and apprenticeship requirements. So I went down a rabbit hole with that topic, but it's an important one. So how you can have the cost and classify the cost, especially in 2023 and beyond, is going to help or hurt and take you down potential rabbit holes of if this then that scenarios. There's going to be lots of them as you move down the path. So it's something to be cognizant of. Keep in mind, and again, if you have questions, I know it's deep, I can help you kind of work through some of that. Feel free to reach out to me, and I can be of assistance there. I'll get back into that. So back into the requirements. So we were on the requirements of the allocation letter. So the date that the energy efficient commercial building property is placed into service, that needs to be in there. And they're recommending, and I mentioned this previously, they're recommending that they check this against the CO or other closeout documentation, essentially. So they're going to be checking this. They want to make sure that you're not using the wrong date because maybe it was convenient for you from a tax perspective. It was, you had more gains in a different tax year, so you got cute with when the completion was. So this is an area that needs to be looked at and make sure that you can substantiate the date that's being used on that allocation letter. Now the amount of the Internal Revenue Code deduction allocated to the designer, and it says to verify, and I'll highlight this. Verify that the allocation amounts are in dollar amounts and not percentages of the deduction. So this was done, this document, and they may never change this document, and this may still be what they go on, but it's actually pretty impractical to put the dollar amount on the allocation letter on the front end, right? So from a practicality standpoint, you are doing these energy efficient commercial building deductions, and you're doing, you normally put the cart ahead of the horse. I like to say, you're going to go get this allocation letter signed first. You don't know what the amount of the 179D deduction is going to be prior to us doing our study. I mean, you may have an idea, we may have done a feasibility analysis, we may have a really good idea, but you don't know for a fact until we get on site, we do our verification, we field gather whatever information is missing. We're not going to know. And we perform all of our energy modeling. We're not going to know the hard dollar amount. So in this case, they're wanting to verify that the deduction is not in the form of percentages. There was a recent case, it's called, I refer to it as the Edwards case, IRS case, where this actually got clarified inadvertently. The deduction, that allocation letter that was used as part of that case was done in the form of percentages, and they actually they allowed that deduction, and they allowed it to be done in percentages. So from our perspective, there's case law now substantiating that this does not need to be in the form of a dollar amount, rather percentages, and percentages could be fine. In a case of an audit, we can point to said case law and said, hey, in the case law, you know, Edwards versus the IRS, and it's not Edwards, like Johnson and Johnson, it's husband and wife who own Edwards. But in that particular case, the allocation letter was done and we're using that same case law as precedents to do our allocation letters the same. So that's no longer a real area of issue, right? Now, on the flip side of that, if we know what the deductions amount are going to be, and you are going to get this allocation on the back end or whatever the case is, and you can put in the dollar amount, it's one less area that needs to be argued with the auditor if the dollar amount is in there. So that's something else to keep in mind as well. There are certain scenarios, certain government agencies who already have an established protocol and processes in place to allocate. And one of them, and some of those, what they do is they issue you an intent to allocate, and then they don't give you the allocation letter until the end once we turn in the final certification. So in that case, let's go with the right dollar amount and not go with the percentage. And it provides you the ability to not have to argue another point as part of an audit. So you need to have the signatures of the authorized representative and the government building owner. And there's a penalty of perjury statement that has to be on the allocation letter as well. And here it says that the service is not endorsed a particular allocation form or allocation letter. So they don't have a pre-established template. Yeah, you just have to meet all of these requirements within your allocation letter in order to have a valid allocation letter. So, all right, I'll get into this next step that they're going through. Next step is they're going to verify that the allocation deduction is made to a qualified designer. So, and again, I touched on this pretty heavily. They want to determine which designer is primarily responsible and allocate the full deduction to them, or at the discretion of the owner, at the owner's discretion, they may allocate this deduction amongst multiple designers. The amounts or proportions of the 179D deduction allocated to each designer is at the discretion of the government building owner. So that gets into that topic I was on earlier, where this can go to multiple designers, etc. It also gives them a caution, says this provision does not grant the building owner the authority to determine that a taxpayer that is not eligible to be a designer for purposes of 179D is a designer. So if an individual does not otherwise meet the requirements for section 3.02 and notice 2008.40, they are they can't be assumed to be a designer. So the point of that is you still have to meet the definitions of a designer. You still have to go back to that slide that I spent some time on and meet all of those requirements. Just because you got an allocation letter and you talked your way into getting an allocation letter does not automatically make you a designer per the government agency giving you an allocation letter. So that's a high level point. I mean, still being a designer is still an important component to this. Got a question here, says all the language says government building. Is this the same for nonprofits? It's a great question. Thank you. This document was produced back in, updated in 2022. We don't have the current IRS guidance for the Inflation Reduction Act. So we don't know if they're going to use the same language or not. We assume this will be updated at some point, but more importantly, we're waiting on Treasury guidance to determine what exact language is going to be used and if there's going to be any changes when we look at the nonprofit side and the allocation to nonprofits and whatnot. So that's still to be determined for post-Inflation Reduction Act changes that happen to Section 1790. So thank you for that question. All right. And this is one of those steps that really bothers me within their allocation process. It kind of, to be honest with you, kind of pisses me off because I think this is an overstep on the IRS's part. In step 9, they're actually being told to interview a representative of the government building owner. It says the third-party interview can shed light on how knowledgeable the authorized representative is about the 179D deduction and the nature of the property installed on the government building owner. The following steps can be used. 1, verify that the owner of the building is a government agency and not a business, not a nonprofit, private, etc. And again, step 1, that may change, right? So with Inflation Reduction Act, this will probably change to make sure that if it was placed in service prior to 2022, that it's a government building owner, not a nonprofit or private university or whatnot. Furthermore, if post 2023, that shouldn't apply. It also says if you're uncertain whether the taxpayer is a designer, verify the taxpayer would be considered a designer under the requirements of the notice. I mean, again, they're beating that designer dead horse pretty heavily. And it says verify that the person who signed the allocation has the authority within the organization to do so. And that's actually a good one. I just don't care that they're doing it by interviewing the representative government building owner. So, a lot of folks just get anybody to sign these allocation letters. You have to be somebody with some authority at these government building owners. You have to have the authority to essentially contract on behalf of the government to allocate this deduction. Johnny, the custodian, shouldn't be signing off on your allocation letter. So that's an important point there. But again, I don't care for the overreach of actually interviewing the government building owners or going and knocking on your door. So we've run into scenarios specifically in Texas where we have government agencies or school districts who refuse to sign the 179D over to architectural firms, MEP firms who are 100% valid designers, but they are refusing to participate in the process because in the past they've had the IRS knocking on their door, interviewing them and bothering them about allocations they've signed in the past. And I mean, if you ever dealt with an IRS auditor, they're not exactly the friendliest people. They like to intimidate a little bit. And I'm sure those I can assume, right? I can make some assumptions that these conversations weren't, pleasant ones. They were pushing and whether they're lawyers or not, or they use the same type of tactics to essentially interrogate and get information to disallow this incentive. They're going in there in a fashion and questioning these government officials who didn't do anything wrong, right? So their question, it just comes off like, hey, I'm an IRS auditor and you signed this over and you shouldn't have. So there's a negative connotation there on my end. I personally don't care for it for that step, but it could be a possibility. They're being told to do this. So just keep that in mind. It shouldn't scare you away from doing it if you're meeting all of the requirements. And again, if we can kind of check off all those boxes and everything looks nice and clean, they have to have a reason to dig deeper, to go to the step, to knock on your client's door. If everything's for the most part on the up and up, you're using a reputable firm,
you have reputable documentation, your contracts are in line, you're clearly a designer. If you're checking all those boxes, they will likely bypass this step. They're not going to go dig deeper. So, and here it goes again. It says verify that the taxpayer is the designer of the energy efficient commercial building property. So in order for them to verify that you're the designer, they want to consider the following when determining if the taxpayer is a designer. They want to, one, review the contract to determine whether the taxpayer had any design responsibility. Statements in the contract that the taxpayer proposed changes require the architect or engineer's approval indicate lack of design responsibility. So what they're saying there is if your contract's saying that everything is, dependent on the architect or engineer, you're not responsible, right? You don't have design responsibility. Is the taxpayer's name on the sealed drawings and specifications of the project manuals, bid documents, contract documents? That's another step they're looking to verify. Are there other designers? If so, how many and why are they considered designers? Did the other designers receive an allocation? So they're digging into who the design team is and who's involved in the design. And here's the big one: is the taxpayer merely an installer of energy efficient commercial buildings? So that's a good test, right? Did I merely just install what somebody else designed? If you can look at your relationship to this project and go, and you see that you meet that definition, you're probably not a designer. So I merely just installed what, Johnson & Johnson architects designed. So in that case, you're just installing. So you're not involved in the design. If you created some shop drawings, provided some input, this and that, you're not meeting that requirement for what they're looking for. So it says review and determine the amount of the IRS 179D deduction. This is pretty simple. They want to make sure that you're not screwing up the math on the 179D deduction. Believe it or not, we've seen them screwed up by competitors. I don't know how. It's pretty simple, but verify the accuracy of the computer models. So they're asking these auditors to, this is a funny one to me because they're asking auditors who are not engineers to be engineers and verify computer models, simulations, which they probably don't have much knowledge of how to do, but it's entertaining nonetheless. They want you to obtain the output and input files for both the reference and proposed buildings. This is stuff that we include all within our certification. So we know what they're going to ask for. We just give it to them. We drown them. Some of our reports are thousands of pages. You want the input files on these hundreds of buildings? Here you go, Mr. IRS auditor. There's hundreds of, here's hundreds and thousands of pages. Please review them. Let me know where we screwed up. We're happy to give that. So information. Verify basis reductions were properly made. If a designer is an S corporation or a partnership, its ownership interest should be reduced by the amount of the deduction. So that's the next step. This is an area your CPA should handle. You make sure they adjust the basis, their corporate basis, if they're a flow through entity, and that they're reducing basis reduction. That's a conversation to have with your CPA. It's not really something we handle for you. And then they want to consider penalties and adjustments, if they're warranted. So they're looking to penalize you. They're looking to see if you made a mistake, and penalties and interest should be warranted for negligence, or you're going out of your way to underclaim revenue and reduce your deductions accordingly. So I got a question here. It says, I would think that you could fight if an architect or engineer has given the approval, then you are not a designer. Oversight is not design. Yeah, I think it could be fought potentially, as long as there's other areas that that potentially put you in a position that you can point to as to the design. It's going to really be on a case-by-case scenario. So in my opinion, bring the scenarios to us. Let's have a conversation with it. Let's get your CPA involved. That's always I like to have an open team approach to this. And everybody needs to be comfortable with what we're getting into and how we're going to attack this, right? If you're going to move forward as a taxpayer and you're taking a position that is leaning towards gray or could potentially be seen as gray, as long as everybody involved understands what they're getting into and everybody's okay with it, then and everybody made a conscious decision or substantiate can substantiate the reasoning why that position should be taken, I think it's a safe bet. And number two, it shows the IRS that this was thought out. There was a meeting about this. There was a discussion. You brought in professionals, CPAs, engineering firms, experts in this area to discuss this subject, and you made a conscious decision and had a reason why. You know, if you want to take a more aggressive position, get a professional. You know, we can get a tax lawyer involved. Get a opinion letter, you know, from your CPA. Again, these are things that, if anything, you're taking an aggressive position, it'll help adjust. You won't necessarily have penalties or interest adjusted with this due to IRS safe harbor practices, safe harbor laws as well. So that's an area where, hey, I may want to go down and take an aggressive position, but I want to make sure that all my professional teams, you know, at least I thought about it and I didn't just do it because I felt like doing it. So that's a pretty good approach. With that, that's the end of the presentation. I ran out of time. I thought I was going to go quicker. I apologize. I was trying to get it done faster, but it's a pretty robust subject. I hope everybody learned something today. I hope you had some deeper input. If you have any other questions, I'll stick around for a couple minutes. Feel free to type them in the chat. I'll send out these presentation and information after to everybody who attended. But in the meantime, I really appreciate everybody's time and hope you and if you have AIA request for us to do the continuing education requirement, please send me an email. You can send it to ddiaz@walkerreed.com and we can get that clarified for you. All right, thank you very much, everybody. Hope everyone has a great day.